Long term, I think there's the grind higher in the stock. If we go out a couple of years, but you have to do this in order to buy the stock now, you can find your way to $100 in earnings power. That's 5 years out, and so there's a reason to think that this can still work on the long side. If you're willing to go out of 3 years or something like that. I don't think this is anyway an easy pick here, but fundamentally, this is probably the single best story across the internet sector because of its strength in retail, because of its strength in cloud computing, because of its strength now in advertising, and then the potential for this platform to tap into new areas. I mean, if you're going to own one asset in large cap internet and put it away for 3 to 5 years, it's hard for that stock not to be Amazon.
You've just laid out a lot of positives for owning the stock, but what are the risks?
Risks, there are 3 of them we think about on this name. First has to be regulation. I don't think that there's an easy ground upon which to regulate Amazon now, but obviously something of this size, of this magnitude, it should have regulators looking at it more closely over time, so that's going to be one. Second is competition. In each of those segments that I mentioned, there are viable competitors. In advertising, obviously, there's two behemoths. There's Facebook and Google in cloud. There's a bunch of players. Microsoft's in there, and Google as well. There's some international assets that are competing. And then core retail, there's always there's Walmart. So there's competitive risk. And then the third risk that we think about with a name like this is maturity. The one advantage you have looking at Amazon today is that it's a single-digit percentage, and it's a low single-digit percentage of their end markets, whether that's cloud computing or retail that's online today. So the penetration growth story here is probably arguably much stronger than it is. Long-term penetration growth is much stronger than it would be for, say, a Google.
Mark, we are looking at a stock in Amazon that has moved $500 billion in market cap in 10 months. How do you buy a stock like that? What do investors have to be prepared for with that kind of a move?
Well, just keep in mind, we're hitting an inflection point here in Amazon. And the reason we're hitting an inflection point is that we're seeing profit levels that we have never seen before. So there is something new about Amazon this year. This company is showing, because of the increasing mix shift towards cloud computing and in advertising, they're able to reach profit levels that investors did not think were ever attainable by this company. I mean, you go back 20 years, and that was always the question mark over Amazon. Yes, they can generate revenue, but can they ever generate reasonable profits? And then in the last couple of years, is yes, they can generate revenue and some profits, but how high can these margins really go? And now if you look at this, you could see a path to double-digit operating margins. That's something that was impossible until they rolled out cloud, until they rolled out advertising, and then they started gaining a lot of momentum and scale in core retail. So this is a different animal than we've seen in the past. And just to give you one quick number here, on free cash flow, this thing does trade at a high multiple. It's almost 40 times free cash flow. But you've got growth here that's almost akin to that. You're going to have 30% revenue growth with margin expansion, free cash flow margin expansion. So you're really almost buying it at free cash flow growth. That doesn't mean it's a great buy here. But for a long-term asset, you have to think long-term on this. I think this is still one you want to own.